Good morning, natural gas traders. Welcome to the every Saturday technical analysis of natural gas. And I will be breaking down the levels where you guys can potentially play off of a support or a resistance, depending on if you're a bear or a bull. And I'll also give you guys perspective from both sides, as well as the psychology of natural gas ticker itself. And let's get into it. So right now we're looking at the daily time frame for NatGas. And we have 2 weeks ago, we were talking about this falling wedge where it broke out of it. So you can see the mirror looking line. It's been trading in it for a couple months and we broke out of it right here bullish. And I was talking about it here where we had a nice daily uptrend confirmed. So that we'll likely get a follow through because we haven't had a daily uptrend for a very long time. You can see none of that here in this whole chart. We'll have to probably scroll back quite a bit. And so we did get a lot of follow through. And then we hit this resistance zone right here at this 2.6 zone. You can see all these volumes traded here, all this rejections here as well. You can see we kept on rejecting here, couldn't get over it here, rejected here 4 times, and came back down here again, rejected again, and rejected again. So we came up here to this zone, and it made sense for us to reject it the first time due to the amount of resistance here. So when I said when we saw this pullback, and last week I was saying we needed to bounce here for the bulls to shape up a better continuation of that daily uptrend. So like a wave up, wave down, uptrend confirmed, wave up, wave down. Now we want to see this level hold for us to form continuation of the daily uptrend to continue. But we couldn't do that. You can see after this pullback, we did bounce off that support where it was acting as prior resistance, becoming support over here. So that was a good sign for that day. But then after this one was the red flag for me. That would be on last Thursday. That's a red flag for me. And after we break through there, that you can see there's not much support in between here, these two levels, and now we have also broken this level of support. There's a lot of red flags now. The psychology of natural gas, very often it breaks a resistance and then it fades, or it breaks a support and then it just bounces. So it goes both ways. And the most frustrating thing for me for natural gas is that it's a stock that after it does a decent move, it just slowly fades all of its gains back. You can see this was a 36% move, and now we're just fading again. Just like back here, you can see this was a very nice move, 43%. And then we just gave it all back, just slowly, fades and fades and fades. It makes a new low. So we have to look at, is that going to happen again or not? And let's take a look. So right now, we broke below the support, and we actually retested it on Friday. So we came up to it, hit that area, and rejected from it. You see that upper wick, meaning here I zoom in into the 15-minute time frame for you guys to see clear. So that means that we came up, hit this level, and then rejected from it now. So my guess is that if we do break this sideways range right here, which we did bounce off of it right here slightly. So this level right here is acting as support due to it was acting as resistance early in the morning. We broke above it, hit the prior resistance. Now we come down here, bounce off of this prior zone. Prior resistance now becoming support because we're above it. So we bounce off of it in the last 30 minutes of the trading day. So we didn't have enough time left from Friday to really see if we're going to break through this back down or come back up here to test it again. So on Monday, or futures open on Sunday, we'll see if we do come back here and retest this level. If we do break above it, then we get a little bit of a sign of relief from the bulls. Although we are not looking good at all for the bulls because every trend is currently in a downtrend. So the most near support zone for me right now is exactly where this spot where we bounce off of right here. You can see all these zones right here. If you're trading in the shorter time frame, you can see this was a rejection, resistance, all this resistance. Now we are above it, so we acting as a support. So we'll see if it can actually hold this cluster of sideways. So if it doesn't, then let's take a look out, see where it goes. So we'll come back to the daily time frame. If that breaks, which is this low of this day, low for this Thursday and Friday, if it breaks low of those days, we are coming back down to here, the 1.9 levels where it was. Bounce off of it 4 times. So it's a quadruple support down here. You can see. So we'll very likely come back here if this low of Friday and Thursday breaks. And if we break that, then we're making new lows. Then there is no support. There'll be a price discovery. It'll have to do, come down here, chop around, and then we'll find out later where the support will be, because there is no price here for us to do any support. Let's see from history. Oh, actually, we do. If we go back to 2022, which it's not very helpful, but we do have a little bit of support here. Cluster of you break that, but that support is this quadruple bottom support, because you can see this top here, it was acting as resistance, rejection, right? So that's why we bounce off of here 4 times in a row. It was acting as a support for this cluster. That is the level of support we need to hold, which is this one right here. And so if you're a bear, you can either take profit already due to this move down, or you can wait until we break back above this part that we rejected on Friday, this 2.13 level. We can just take profit down here on this quadruple support bottom. Set a stop loss above here. If we do break above, you stop out and you with your gains, or you can hold it till we take profit to your targets. If you're a bull, definitely don't want to see this level break, and hopefully it bounces off of here. And 6 hours would be my guide. Let's go to 6 hour time frame. 6 hour EMA 12, which is this, you can see right here, EMA 12, which is this teal looking line, will be my resistance guide. It's been trending down on it perfectly for the last couple of days. So we can see this rejection. If it continues, then there is no red flags for the bears, and they can just hold their position until, let's say, EMA 12 breaks or it hits their targets, and they can take profit. So this will likely go like this, and then we'll come back down. If we do break that low of that sideways support, come chop like that. And so that's the perfect guide for a bear. And then for a bull, we want to see us obviously break above here and have a candle actually close above that EMA 12. Looks something like this. Boom. Then we finally break above this level and come back up here. So the first thing the bulls want to see is a hourly trend change back to you guys. And as of now, every trend is in bears. See, wave down, wave up, wave down, wave up, wave down, wave up. So it's a downtrend right now. So you can see all these pivots are making lower highs, lower, 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 lower. So if we zoom into the hourly time frame, the very first thing I want to see from the bulls is an hourly trend change. Something like this right here, where we have a big enough move. So this was a 4% bounce. So now we want to see this set as a higher low, meaning this low is higher than this low. So now if that sets, then we want to see it break above this high, sets a higher high. That would give us an hourly uptrend. Wave up, wave down, wave up. Now if we break above this high, that will confirm an hourly uptrend. Just like down here, it's an hourly downtrend. So this is hourly downtrend. So it's still an hourly downtrend. I've been talking about all my videos where the size of the move increase the probability of the next move being a uptrend due to the size of the first move. So for example, just like this one here, there's a big move down. So the most probable scenario is that we break below this level and make a new move down. So bears didn't do that, and bulls held it. So that's a good sign for the bulls initially. So like this, the very first initial sign for the bulls that bears are lacking follow through here at this level. So this was supposed to be a confirmed continuation of the hourly downtrend. You can see bears tried here, right? See that red candle right here? So they're about to break this level, and bulls held it, and they bought it. You can see a little bit of volume coming here, increasing bull volume, and they try to reverse it. And there was not enough time for the end of the day for them to change the trend. So that's what I want to see on Monday, that they can change this trend back to their favor for the bulls. So for the bears, set top loss over here, and that's what I would do. But depending on what you want to do, for the bulls, if you bought it around this level, I would set a stop loss below here, this double bottom here, where the bulls played defense and actually held. The psychology of it is that you can see back here, big move down, bounce. The most likely scenario is continuation of the down due to the size of the move down. The most probable scenario is another down, which is exactly what happened. And so now this was supposed to look just like this. See how shallow we bounced? And we should have had gone down here, but bulls showed up. So that's the very first sign the bulls actually showed up in the last, at least all the way from last Thursday, 25th. So that's been the first sign where the bulls showed up here. So so good for you guys for the bears, but now there's a little bit of a sign of the bulls. So I want to see us confirm the hourly uptrend for Monday. And if they don't, we're looking back down here again, just like we talked about earlier. And this rising, falling wedge, give me a second here. This falling wedge would be gone now. So since it broke above, so let's see if we move this a little bit here, see what it looks like. Let's see. So that looks like a channel to me, completely sideways, just this channel parallel to each other. So then there could be a potential, we just collect this. So if we do break this level, a quadruple, okay, why did I just do that? So if we just break that quadruple bottom right here, then I'm looking back down here at this bottom channel support. So potentially over here. Obviously that would take us probably into the end of next week if that does happen. We're not going to just go straight down here, but yeah, so this channel will be our guide. And let's take a look at UNG, which is the tradable ticker for NatGas. And you can see here the falling wedge is still intact for UNG perfectly. See, rejection, 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 support, support, support. And we're getting really close to it right now again. So this UNG falling wedge is still in perfect shape. And that's it broke pretty much all of the support, and now we're looking down back here. But if NatGas holds, obviously UNG would also hold as well, and it will be probably testing down here. So if NatGas hits right here, I call it the bottom, UNG will very likely hit this bottom right here of the support for the falling wedge. So that could potentially be a good entry if you don't have entry at all for a potential scalp trade, daily bounce, get like a 4 or 5% in, or you can swing it for a day or two. It's up to you guys. It coincides perfectly here with right here. And then you just set a stop loss underneath all these quadruple bottoms. If you're scalping and you want a bigger move, you can go to Boyle. Boyle is you leverage 2x ETF for UNG. So if UNG moves down 1%, Boyle is going to be down 2%, vice versa. So like see this big green candle right here, it's 17%. So that was UNG right here, making an 8% move. So it's a double the move. So right here, right, this one right here, 7%, you can see, 8%. So that move was 17%. Yeah. There's a lot of opportunities in UNG or Boyle intraday. I don't like to hold natural gas at all because you never know, especially with commodities. It does not trade like a normal stock where there is fundamentals backing up of it, like or other things like an ETF. So you got to be very careful holding commodities such as UNG or NatGas, because next thing you know, sometimes there's a gap down, especially this one right here. This is a 12% gap down on a Sunday right here. So we had a break and see this huge gap down. It was like a 12% gap down. That was like a 24% gap down on Boyle. So you can see you can get your gains wiped out in literally one day. And so you gotta be careful holding these things, especially over the weekends. Um, so yeah, I'll always get out on Fridays. Currently, I'm not in a position, so I have no bias in whatever way this NatGas moves. So I'm giving you guys the direction for both sides. If you're a bear or a bull, giving you guys the levels for play off of each ways. So if it bounces off of here and goes to close to here, which is the prior resistance zones, we're very likely looking at this guy bouncing close to over here. This zone coincides with these quadruple tops here, resistance prior. So let's say we come down here and UNG hits right here, and then it bounces, and then which will bounce here close to here, which also coincides with this level. So I watch both. Sometimes they do move a little bit different. So all right, that's all I got for you guys on natural gas. So if you guys got any questions, feel free to comment below, and feel free to also comment below if you're in a bull position or a bear position, and what's you're currently looking for in natural gas. And if you made it this far, feel free to subscribe. And I will be doing natural gas updates every Saturday. And if anything crazy happens in natural gas, like something like this kind of a gap down, I will obviously make a video on it during the week. But if not, then I will update you guys next Saturday. And tomorrow I'll be updating on the big tech stocks: NVIDIA, Tesla, Amazon, Google, Microsoft, and Apple. So those six are the ones that always moves the market. So they move QQQ, and QQQ will be moving SPY, and SPY will be also moving the market. So those six stocks are very important, and I will see you guys tomorrow. If you guys gonna, as well as Monday, I'll be doing the daily market updates on SPY and QQQ, and overall whatever is happening in the market. And we just got our debt ceiling passed, I think 3 hours ago. So that will potentially drive the market in a volatile way. We don't know if it's going to go up or down due to the market. If the market was tanking a lot and we got the ceiling passed, and I would say obviously the market is going to go up. We have been running quite a bit already. So that could potentially be a sell the news event. So we'll see. We'll have to see on Sunday, 3 p.m. PST, where the futures will open. Then we'll see if we gap up on or gap down on that news when the market futures open. All right, that's all I got for you guys. I will have a great rest of you guys' weekend, and I'll see you guys tomorrow.